After record gains from international price movements, GAIL working on monetizing its huge pipelines for further wealth creation. For central government, one nation, one gas grid is a noble strategic initiative to provide environment friendly and affordable fuel and raise the natural gas content in the energy basket to 15%. For GAIL India, it is a great growth opportunity both in its gas pipeline and trading business. I am Vittal Prabhu, bringing you the weekly video on Stock Learning Simplified. Hope you will find the video interesting and useful. GAIL is among the top public sector undertakings of the country. It is into natural gas processing and distribution through its long pipeline network. In the transmission business, dominant market share, and other peers are distant seconds. About 60% of the shareholding in the company is held by central government along with the ONGC and IOC. 35% is with institutions, FIIs, mutual funds and other DIIs. Balance is with the general public. GAIL is growing in prominence, moving into an energy major of the country. A look at the revenue and profitability for the trailing 12 months up to September 2021 in comparison to the previous 2 years throws some interesting and satisfying developments. Although revenue has lagged behind, there is substantial improvement in NPAT percentage and EBITDA percentage. NPAT has reached 11.1%, which has been the highest after March 2018, and EBITDA has been at 14.8%, higher than what it was in March 2018. Behind this substantial improvement are two factors. One, LNG price environment internationally was quite helpful to GAIL, and the economic recovery observed after the initial pandemic has been quite encouraging. A closer look at the EBITDA mix throws some surprises. Natural gas and LPG, which was contributing about 2/3 of EBITDA, amount stagnated at around 4,000 crores and its share came down to 43%. But the surprise was natural gas marketing, which moved from 160 crores, which is 2%, to 1,662 crores, taking its share to 16.9%. Along with the natural gas marketing was petrochemicals, which moved from 86 crores, which is hardly 1%, to 1,544 crores, contributing almost 16% of corporate EBITDA. Was a pleasant surprise. LPG, there was a growth of 50% and it could manage its contribution around 20% in the EBITDA mix. But what was really remarkable was the growth observed in case of natural gas marketing and petrochemicals, which raised the total from 6,000 crores to 9,853 crores. The reasons are quite simple. Transmission was growing, but the growth observed in LPG and petrochemicals was largely due to external factors, which is spot LNG prices prevailing internationally, which became realized gains for GAIL, and that is a great profit and wealth creation by GAIL. Another strength of GAIL is contribution from its subsidiaries, associates and joint ventures to its overall profit kitty. GAIL per se contributes around 70%, but the balance 30% is consistently coming from its associates like GAIL Gas, Mahanagar Gas, Petronet LNG, Brahmaputra Cracker, Indraprastha Gas and China Gas Overseas. And that is a great strength, having diverse sources of income on a regular basis. Transmission is the core of GAIL's business. It is focusing to commission major pipelines over next 12 months, getting connectivity to the end users of industries like fertilizer plants and refineries. It is having expansion programs in its diversification projects of petrochemical, specialty chemicals and renewables. It took stake of 26% from ILFS in ONGC's Tripura Power Company Limited recently. Focus on transmission apart, GAIL is also concentrating on city gas distribution to cover areas across the pipelines. Once the national gas grid is in place and the ongoing refinery and petrochem expansions are completed, GAIL is expecting major increase in its financial deliveries. GAIL has an autopilot cash flow, except for working capital changes abnormal 3,500 crores during September quarter due to buildup of receivables. There was a buyback in January 2021 in which almost 70% of the buyback amount went to central government as a part of revenue mobilization. Barring that, the company has got sound debt service coverage ratios and cash flow is positive. When it comes to payment of dividend, GAIL has been quite successful both in terms of prudence and being investor friendly. On a 7-year period, the median is around 41% payout, while the average comes to around 35%. Its normal payment of dividend of ₹5 per share at the current price yields 3.52%, which is quite impressive. And also interesting to note, GAIL is among top 25% dividend payers of the country. If we take the share price movement during the last 18 months, we observe positive growth for the first 15 months, followed by sudden fall for the last 3 months of that period. In the process, the company could generate a growth of 40% over 18 months, which when compared to the market returns is not quite impressive. With all the credentials of GAIL, if we take the consolidated profits on a trailing 12 months basis and to the current market price of 142, the resulting price earning ratio comes around 6.7, which is the second lowest during the last 6 years. While the PE multiple is quite low and attractive, it is also essential to note market's rationale behind reaching that low PE. Even from the perspective of enterprise value as related to book value and EBITDA, GAIL makes grade. In terms of enterprise value over book value, the multiple is coming to a meager 1.2, and even when we take enterprise value over EBITDA, the multiple is an attractive 6. Means GAIL, seen from the perspective of PE, book value and EBITDA multiple, comes out as a quite most eligible script to be understood and absorbed. The daily chart is significant for the 7 candles stacked linearly, cutting across 20, 50 and 100 EMA, and gives us an indication that it might be a sure sign of bottoming out. There is a coincidence, 38.2% is 142, where the current market price is also stationed. As Fibonacci levels act as the first levels of resistance, this crossover beyond threshold becomes quite significant and essential for any upward movement. Price action data for the last 3 months indicates the average price has moved from 139.7 to 139, an issue of a fall. Similarly, the quantity has moved from 105 lakhs to 75 lakhs between the period of 1 day and 55 day. That is a fall. And if we look into the delivery percentage during the period, starting with 50%, it is moving up to 40%, suggesting the third parameter also falling. Quantity per trade, which was 189.6 for a 55-day average, recent average is 154, suggesting there is a fourth fall. When all the 4 fall, it is expected there will be a reversal of trends in the near future. Option chain for the month of January. on 10th at ATM of 142.5. Pain gain is at the lower level of 140 and it has got a negative bias with the other two levels being 137.5 and 135. On the contrary, if we take the premium decay, the premium is higher on the level beyond ATM at various combinations, and that being so, it is moderately bullish when it comes to premium, but in terms of pain gain, it is slightly negative. For an overview, it has three weak points. One, any tariff revision is subject to governmental approval. Dependency is there. Transactions more pertaining to and linked to crude prices which are quite volatile and therefore might prove to be working against the company in future. Its profit after tax on a standalone basis is dominated by other income to the extent of 40%. This is a big negative. But when it comes to positive, it has got a vast network of pipelines which central government is working on monetization, and that can be a great value unlocking proposition. Earnings are reviving based on expansion programs and also the nation's strategic initiative on energy. Considering both negatives and positives, GAIL is an excellent quality, undervalued and fast growing company. Hope the video was to your expectations and you found it useful and interesting. You can access similar videos at our info card on Stock Learning Simplified with rich and informative contents. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your time, support and interest. Disclaimer: this video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action.